Welcome to readtheticker.com. Today we're going to talk about two NYSE stock index secrets. And what you see in front of you is the NYSE weekly index, standard data, and a customized RTT Steps, which is like a moving average, but it's really stepping based up on support and resistance. Obviously a nice trend, has the lower black line stepping up nicely. The green line can lose its form, but so long as if both of them are stepping up nicely, you have a nice trend where price is moving up from one accumulation zone to the next accumulation zone or stepping stones. And obviously when a price falls back into the step, that is supply overcoming demand, and we're waiting for demand to stand up and take over the falling supply. And here we are here, we have some supply come in. We're on a critical level around 10,000 for the NYSE. So at the moment the supply is present, so we want to know what this two secrets of the NYSE data can tell us. Well, below we have a black line, and this is NYSE monthly margin data. Now once again, it's good to see in a healthy stock market margin increasing at a steady pace, and also when it does fall back, it creates a step. As you can see here, margin fell back. It didn't really fall back sort of too far on the previous one. It fell back to support, stepping up nicely. Here's a bit flat, fell down a bit there, as you can see, but still stepping up nicely. Okay, so now we have a move up in margin, but we've actually come back to the support. But what is interesting to note about NYSE margin is that we've had a rather large jump in margin from about 440 to about 510. I think that's billions. Was that million? I'm not sure, but it's a lot of money anyway. So it's gone up from 440 to 510. Okay, so that's over 10. That's about 12% move in margin. But relative to the movement of the index, you can see here it hardly moved up here. All that money came in on margin, but the index went nowhere. That's because the big boys normally front run the extra spending in margin. They see the money coming in, so they realise there's a lot of push in the market, so they get in front of it. But here they did not get in front of it. They sold into it. That's why the movement did not have any large upswing. For example, here's a rather large increase in margin, and the price actually did move up, so that was a healthy move. And here's another movement of margin between the blue lines, and yes, price did eventually move up after a bit of a pullback. Let's have a look at that now. Yeah. So yes, there's a bit of a challenge going on there, but that was healthy as it stayed above RTT steps. This was one warning, so that's secret number one. Watch the NYSE margin. If you have a large increase in margin and not a corresponding increase in price, where's the money going? Is someone doing something else with it? So in this case, I would say, quite frankly, that the margin was sold into by the big boys, the brokers and the institutions, saw the money coming in and said, oh, well, we'll just sell into that. Okay, so that's secret number one. Secret number two, here we have NYSE Advanced and Decline Index weekly. Now once again we have our RTT steps. Here's the settings are 26.3, 39.6, and this is a bull version. That's BULL. So once again it's stepping up nicely. When supply comes in, it does penetrate back into the step. As I said before, you want to see the nice black line moving up. That's the bottom line, and the green line holding its form as well. And as you can see here, what actually happened is that when we have a bit of a pullback in stocks, supply comes in and it does challenge the step. That happens in price as well. So we don't want to, obviously if there's plenty of demand around, supply is quickly overcome, and the more supply is around, I'm afraid demand just doesn't have the power to push it back up. This was interesting. As you can see here, NYSE index fell below the step here, but the price held up. So quite frankly, this is underlying weakness. A lot more selling going on in the lower, less important stocks, dragging the index down. Sorry, this is the Advanced and Decline Index. So the Advanced and Decline Index was dragged down by a lot more selling of the less important stocks, not the market cap ones. But on the NYSE index, you can see the NYSE index was held up, because it's a lot easier to hold up the NYSE price index, because they can just keep 50 to 100 stocks up. It keeps the whole index up. The point about it is that this showed the underlying was weakness, and eventually price came in. Now at the situation now, we have a critical time where NYSE index is on support of the lower step, and quite frankly, since 2009, 1st of March, this indicator of NYSE advance and decline has not broken the black line. So it would not be a very good sign if the NYSE advance index fell below the black line. Not a good sign at all. It will be the first time since 1st of March 2009. So that's secret number 2. Secret number 1 was watch the margin. See if you get the push that you deserve from an increase in margin, or you don't. Watch the steps. Secret number 2 is watch the NYSE advance and decline and how well it performs around the RTT steps, and only fall back into the step. You do want to see demand come in and quickly get it out there. And also you want to see situations where this NYSE advance and decline index falls into the step where price does not. That's a pretty good way to judge if you're going to have stocks within your portfolio in the market, is that the NYSE is a much better judge of the market than the S&P 500, because it's made up of 2,000 stocks, and the data of the internals is very accurate, and it has been working for some time. Thanks very much for watching.